Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And what I'd like to do with you with this video is share with you some of the updates we've seen from USDA here in the middle of February. Now, USDA has been able to provide us not only an update on what they're seeing as they look at the 2023 crop as we continue to utilize that throughout the winter going into the springtime here. But they also updated their outlook for the 2024 crop in terms of both planting and supplies and the demand side as well. And so we'll walk through all of those updates here tonight. When you're looking at the corn market, the updates for 2023 were rather small, but they were, bearish in news story here. The idea is that what we saw, the only thing that they changed was really on the demand side. As you're looking there, it's the food, seed, and other category where they ended up reducing that by 10 million bushels. Now, in this case, food, seed, and other is mainly the corn sweetener demand. So we're seeing a little weakness there. But as you sort of look across the board, what they're saying is that while we do have a fairly strong demand across the entire balance sheet, when you're looking here right now at about 14.55 billion bushels being utilized throughout this marketing year, it's still not strong enough to eat up the record crop that we produced this past fall. And so they're looking at building ending stocks up north of 2 billion bushels by the time we reach August at the end of the marketing year. And they see those prices staying in the high fours. They're looking at a season average price of $4.80 a bushel. So that's down significantly from what we were able to capture in 2022. And given that that 480 is a little bit below our estimated production cost for the year, the expectation is we will plant less corn in 2024. In fact, as USDA looks out there, they held firm to their earlier estimate of 91 million acres being planted here in 2024. That's down 3.6 million from what we planted this past year. So they're looking for a little bit smaller crop, but we're still talking about over 15 billion bushels. And as you look at the demand side of what they see coming at us for the 2024 marketing year, they do see feed and residual increasing, but that's more than likely because they see residual usage increasing here. And residual usually means harvest losses, and with big crops come big harvest losses. They see a slight gain as we look out there in ethanol getting boosted by about 25 million bushels. They see that food, seed, and other category remaining flat. And then as you look at the export line, they do see that growing by 50 million bushels. And so that represents probably our biggest source of what's called true growth in demand as we're looking forward here. And if you're looking for higher prices, I would argue it's that export line we need to watch over the coming months to see if we can continue to build up some export momentum there. But as USDA forecast right now, they see that demand building, yes, reaching 14.7 billion bushels of corn, but that's still below our production. That leads to increasing ending stocks and lowering of prices out there. They have the 2024-25 season average price estimated at $4.40 a bushel now. Looking at the soybean side, it was similar. What we saw for the 2023 column was very few changes. In this case, it was the export line where we saw a 35 million bushel decrease in that category, which leads to a 35 million bushel increase in ending stocks as we look there. And so we're seeing again that same sort of issue here that production was greater than demand or usage this year, stocks building. And while the soybean market is a really tight market still, with roughly 315 million bushels being left in ending stocks at the end of the year, we still are seeing those weakening prices because of those building ending stocks. In fact, USDA lowered their 2023/24 season average price down by 10 cents to $12.65 a bushel. Now, that 1265 is still a little bit above production cost estimates for 2023. So a little profitability means acres tend to move that direction. And that's exactly what USDA forecast here. In fact, they show an even stronger movement into soybeans than when they first estimated 2024 back in October of last year. They're seeing nearly 4 million bushels coming into soybean production, leading to the projection of a record crop in 2024 of north of 4.5 billion bushels. Now, as you look down the demand side, they do show some growth on the soybean crush side as we continue to see biofuel development through renewable diesel. And they're showing a slight rebound as we look at that export line there. It's popping back up by 155 million bushels, but that still would put it at levels well below what we experienced throughout 2020, 2021, and 2022. So we've got the same problem that we saw in corn. Supplies, in this case production, less than usage, stocks continue to build, and prices continue to slide. In this case, the 2024 season average price is estimated at $11.20. So we're seeing some challenges as we look forward over the next 18 months within the crop markets, putting price levels at or below production cost as we look forward to the next growing season. Now, looking at some of the things that could really shift as we go out over the next 18 months as well, probably the biggest thing I'll be watching on the supply side will be weather conditions, because the drought of 2024 is still out there. And it's still the same one that we had in 2023, 2022, 2021, 2020. But we are seeing a definite change in the forecast as we look out there in terms of the big, global cycles that tend to push our weather around. As we look right now, we're under El Nino conditions, and El Nino does tend to mean more moisture for us here in the Midwest. And the National Weather Service does see that El Nino sort of holding on until about April, at which time they see us moving into neutral conditions. And finally, as we get out into the middle of the growing season, they do expect La Nina to be back in effect and to strengthen as we look at the latter half of the growing season. So that does bring up some additional concerns, I think, as we look towards weather conditions having an impact on production going forward here, especially if this La Nina does dry us out again as we look towards the latter half of the 2024 growing season. So we've got some weather concerns, but we also have those demand concerns as well. And with the soybean market, it's really struggled with basically rebounding after we saw a dramatic pullback in the latter half of the 2022 marketing year, or you can think of it as basically throughout the 2023 calendar year. We saw about a 300 million bushel gap open up between our export pace last year versus this year. And in fact, as you look at this graphic here, this is summarizing where we're at right now. You can see that overall the soybean market's down roughly 340 million bushels right now. The vast majority of that loss is due to sales not going into China. As we look outside of China, it's mixed. We do have some gains in the European Union and Indonesia, but we're also seeing some losses in Mexico, Japan, Taiwan. But the biggest share, the lion's share, is what's happening there in China. And so the challenge that we're seeing in those export markets is getting Chinese demand to swing back, or cobbling together enough sales elsewhere to help soften that blow. And as USDA look forward into 2024, like I say, they do see some growth there, but not enough to bring us back up to even average levels of exports that we've seen over the past 4 or 5 years. And when we look at the corn market, little different tale here in that we have seen some recovery here as we've gotten into 2024. In fact, when you look at the corn export market, it got hit earlier than soybeans did. We saw the bigger gap open up for corn, but we now are seeing an earlier recovery as well. In fact, as we look, 5 of our top 6 markets are positive right now, with the exception being China again. And when you look overall, where soybeans is running 340 million bushels below last year's pace, corn's running about 330 million bushels above last year's pace. So this is supporting, corn prices here in the near term, but this doesn't seem to be enough of a shift to offset, like I say, that record crop that not only came in from a U.S. perspective, but we also saw a global record crop on the soy or on the corn side. And so That's leading to some additional pressures in the corn market despite us regaining some export market share here. Now, as we look at other areas of growth, I mentioned on the soybean side, renewable diesel, and that has been a very positive development over the past couple of years. As you look at this graphic, this is looking at the total production of both biodiesel and renewable diesel. And we've basically seen that diesel market almost double in the past 2 years. That has led to some additional growth there. That's helping explain why we're seeing not only the building of more soybean crushing facilities around the country, but it's also helping explain why we might see such dramatic growth in acreage this spring as we look at the soybean side, especially as we look at areas like the Dakotas, North Dakota and South Dakota are adding not only 3 or 4 crushing facilities up there, but we can expect that that's going to help stabilize soybean planted area up there over the next few years. So, when we're looking at prices after all this was said and done, what we have seen is generally prices have been trending downward, but at the same time, too, we've got the corn market continuing to keep that carry in the market, not only through the rest of the marketing year here for the 2023 crop, but continuing that all the way out and for the 2024 crop, basically carrying that carry all the way out deep into 2025. That said, though, the idea is that it's putting us down in prices where the market is basically estimating season average prices in the 450 range for the next 18 months. That we're not likely going to see a lot of additional gains. At the same time, too, the market is not necessarily indicating many additional losses from here on either. It's around, again, putting us around break even as we look out there. When we look at the soybean market, well, the soybean market's got some carry, at least for old crop building out there, but it's keeping us still below $12 on the futures market right now. But you can see there's about a 35 cent drop there as we transition to the 2024 crop. The market is expecting that additional acreage to come to soybeans. That's putting additional pressure as we look out there towards harvest time futures in 2024 and all the 2025 futures. And so, again, putting us down in a situation where we're likely going to see prices a little bit below our break even cost. As Iowa State estimates right now, as we look at break even cost for the 2024 crop, those would be 460 on the corn side. So we're just a little bit below that right now with the 452 being estimated for the 2024-25 crop. And as we look at soybeans, our estimated costs are 1125. Again, just a little bit above where we're at with current futures. So we continue to see, pressure on pricing right now, but we also see markets that are looking to sort of stabilize where they're at right now, especially on the corn side. That we continue to figure there's going to be at least another little step down for soybeans, especially if we do see that large acreage growth here in a couple of months when we plant. So that's the update as it currently stands right now. I do want to thank you for your time in watching these videos. Hopefully you have found them of value to you. And we'll continue to do these as we move into the planting season. One of the big things we'll be looking for as we get into March will be actually at the end of the month. That's when we get our first, let's call it, real farmer-driven estimate of what we might see with the 2024 crops, because at the end of March is when we'll see the results from the prospective plantings report that USDA does. So as we get into the early part of March, USDA does a survey with farmers, asking them what do they think they will plant this year. Those are summarized and released at the end of the month, and that does tend to be a significant report for price movement in the springtime. So look for that one as we go out over the course of the next few weeks here. With that, again, my name is Chad Hart. I'm an extension economist with Iowa State University. Thank you for your time tonight.